Okay, Sunday, 3 o'clock, December 11, 2016. Gonna look at natural gas. All right. So Friday's commitment to traders. This includes trading basically the poker hands of the players up to Tuesday. So I work my way backwards here. I start off with shorts and longs of non-reportables. These are the onesie-twosie little guys. Okay, they covered their shorts. Prices went up Sunday, Monday, Tuesday. And then Wednesday, we had basically a retest of the 350 area. And then we closed Friday basically at the breakout. Okay. So I would lean that the targets then would be, I think 84 and then 88 and then into the mid 90s. Okay. On the upside, on the downside, gets a little sticky here. Okay. The UGAZ people basically got out, or excuse me, the DGAZ people basically got out. They're puking up their lungs, whereas the UGAZ people aren't really frothy yet. Okay, so what we have going on here is the little guy, he covered his shorts, but he could not hold on. And that's the downside of this game is when you get a winner, very, very, very small people have the knack to add to winners, and you have to add to winners in this. Okay, it's tough. It's one of those where instead of selling the rally, you buy the dip. Bollinger Bands, a 1 hour chart with stochastics. I use 2 hour charts. Weekly, don't put in the minimum margin, put in the full amount. You put in the 27,000 and you buy a contract at 270, right? And now it's at 370. So you've turned 27,000 into 37,000 in 3 weeks. Okay, that's what I like about commodities. Anytime I hear something that's at a 20-year low, I know that they can only go to zero on the commodities, right? Basically, we'll be opening a little bit, but right now the bid-ask spread is 370, which is a few pennies off, and 375 is the upper end. So it looks like they're trying to open it up underneath right now in the area there. So it's still trying to hold the breakout. As I go through this, you'll see there's only one caveat here. Okay, so other reportables, they didn't cover their shorts, or excuse me, they did cover their shorts. They got out of the shorts. They added more than 10% longs. Okay, so now the other reportables are at 500,000 long and 4,000 contracts short. Okay, they're leaning, right? Okay. Managed money spreading, when do you use more natural gas? Well, we'll say December, January, February, and less September. So that's spreading going on where you buy the months that you use it and you sell the back months. Especially if you start getting backwardation where the front months are higher than the back months. Okay, contango, it's reversed. Spreading going on. Managed shorts, they covered some shorts. They added to their longs. Swaps dealers here, spreading shorts and longs. Okay, merchants, they added shorts, and that would be, say, like the producer hedging. You're going to pull it out of the ground. You want to lock in your price, and they added the longs. Merchant on this end, maybe natural gas, electricity. They're going, okay, what happens if this gets to 420? Okay, that kind of thing. All right, so this down here shows you the percentage of the open interest that's controlled by the producers in that. So they basically have 75% of the market. And then swaps dealers, and then it lists the traders. Like I said, I usually go with the little guy first to see about sentiment, to see if they're frothy. It lines up with they couldn't hold the run. They don't believe in it, kind of like the stock market. They don't believe in it. And they got out. Okay, we also had rollover and things of that nature, so there's adjusting going on that too. I also noticed that they're into March, so if this thing's going to continue to run, it'll probably be run into the March contract. And the other one is I did post Francis's Astro oh, what's the website offhand? He has a cycle high of March of 2018. So I try not to go off of too many, you know, sine wave type deals where this should do this here, that, because it gives you the kind of a false hope type deal. Okay. I just, you know, kind of like we talked about October being a high in natural gas seasonally, and then December. So here we are up pressed against resistance. Is this the high for the year, for this swing? All right, so getting into the charts. All right, so let's see here. I need to switch you over. Where am I here? Okay. All right. So this here, I have both options and futures combined. Once again, the little guy covered shorts, also got out of longs, spreading than that, other reportables, the same thing. This just includes options this time. So you basically have all the market, okay, in here. And, managed money, they have 500,000 long, other reportables 500,000 long, and they only have 30,000 short. So they're leaning long here is basically where we're at, pressed up against a resistance area. Here's the natural gas commitment to traders report. Okay, like I said, it's up to Tuesday's data, and it comes out approximately every Friday. Here you have your large traders who are net short. Okay, net short all the way down to March, where it was a 17-year low. We had our first run up and a pullback. Now the thing is screaming. Okay, so the big guys are going to have to get out of. They think this thing's going to run now for, $4.20, $4.50, $5, $5.20, $5.50 area. They're going to have to get net long. Okay, let's go back even further. And you can see here, natty gas has been in a persistent, this is all due to the fracking and all of that, okay? So you can see, just like the pattern on wheat, where it is basically sideways, just draw your trend lines or your moving average, and it's gonna swing you into it. Like the pros here, they were all short. The pros were short, they're right. The commercials were net long, okay? So rolling back into this here, my thing is that we have a little weather related this week. I notice that Minneapolis is going to go minus whatever. The high is going to be like 0 during the day. That's kind of not normal type deal. This is weather related. We turn on, 25% of natural gas use in the summertime is electricity. We've been trying to roll over from coal in this country since the 50s in natural gas. Out in Mojave Valley, over by Needles, along the river there, they have a natural gas plant. They dismantled a coal one over in Laughlin. Okay, so, we're using more natural gas, liquefied natural gas. I talked about the shippers there and things of that nature. So what do we have on natural gas? Well, when you see a move like this, it's usually short covering rally. It worked out perfectly. It's the momentum on this, just like you see with this, the momentum on it. Okay, going into here. Okay, you have your natural gas on the point and figure chart, came down, bounced off the low. This is, you can kind of think of it as an inverted head and shoulders. This is the downtrend line from $6. It crossed it. Okay. When I talked about putting your stops at around 47, that's basically a retest. Okay. I'm assuming that we did the retest here at the 50 level of this downtrend line. So we should be good to go here. The where's it at here? Boom, 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 boom. Oh, Kebby, where'd you put it? We'll just run through them real quick here. What I wanted to do is point out, about every 4 cents higher on here in natural gas, we're going to run into some resistance levels. Here you can see this is just a straight up natural gas. It poked on through here. But here it's, what's this, 15 cents, 15 cents, 15 cents. We saw the pullbacks of around 20 cents. And one of the other charts, like on here, okay, this is a monthly on natural gas, okay. So here's $1.90, here's $1.60. Just, you have $3, $2.50, okay. To stay in this game here, you had to endure some pretty deep moves here. $3.23, $2.60, $4, $3.50. Then we had the swing higher here on it, which came into the beginning of the year. When I sent out that chart from the 12 to 14 period, it's basically the same type of deal. You have your breakout. Now you have a secondary breakout on these charts, just like everyone else's. The targets here are 448 and 521. I would have to say that this would probably be hit with either February's contract or March kind of thing. They already have some fluff in there. I go and use previous pivot lines. This is a pivot line here, and then R1 and R2. If I see a lot of them together, I use it as overhead. So what I'm thinking here is that we get a swing into, say, like 407, a retest of 388, and then a swing higher into 5. Now, like I mentioned before, I'm going to try and keep quiet, kind of a quiet period here, because I want everyone else, I want to see if they're all getting giddy, because I read the sentiment of the participants here, okay? Basically, natural gas, you have a long sideways pattern on here, right? Is this the low? I'm going to assume that this is a low. It's a 17-year low. We had one low here. We had 2012. This is with the late Aubrey McClendon and his banana niche. He was pulling out of the ground and buying. He was twice as long and ran, and he lost, I think they lost billions here. So we went from $1.90 to $6.50, okay? Here's a volume area here. Here was previous peaks before. So it's kind of like these things in futures. If you clear 3, then you try to clear 4. If you clear 4, then you try to clear 5. That kind of thing. These are previous here with besides the fact of the secular bull market, you also have hard winters, and you can see where, once again, here's a couple years again, couple years. It's been a while since we've had a screaming bull market, okay? So I look at this as a longer sideways pattern. Where's my chart I'm looking for here? That's not it too. That's also the same one. This type of one here too. Okay, this is an Andrews pitchfork. I just drew this in here just for just an eyeball thing. You can see, that longer sideways pattern. Here's 420, 450 area. You're going to get people who are going to come in and start hedging, and that's basically what's. Right now I'm leaning towards the big traders continue to push this thing higher. Okay, we have some weather related type deal. Some of them can be over with in no time. Like here's December, January, and it was over with. That was a low. This was a low in January. Here was a high in July. So it's one of these things that even though it might be over with in May or April, you get this. Remember, I'm looking for a drought. I'm looking for some sort of, I'm looking for a bumper crop this year in grains and stuff. So it would be a mild heating season. That's what but right now we're starting off cold. So it might be where I get the hard winter first and then the drought. Okay. But that's, going off the cycles. Come on, here we go. This is what I'm looking for. Okay. So point and figure, this is coming off of the $6. This is your bear line. You remain bearish until you get to here. Okay, so here you had a lot of volume at 376. and we basically walked right into that 377 type area. That was the first resistance, okay? A lot of volume here on the way down, okay? Here's 384, all right? Here's 388. That's what I roughly talked about on Friday. You know, if they could gap over 388, obviously it doesn't look that way for right now. we're kind of hanging in there, okay? So how I have to lean on this is that I'm looking for the little guys to go back into UGAZ to push this thing higher when they talk about how cold it is across the country or whatever. That's what I'm looking for. I'm looking for the froth and the UGAZ guys. Okay, the UGAZ and DGAZ, it helps me out sentiment-wise. Short term in between the commitment of traders reports. Okay, here I just quickly drew in some lines. It just gives me a rough idea. Okay, I drew one in here. Same thing again, where it's just a rough trend line. All right. So here we're in an area which is also R2 on the daily, okay, on natural gas. So I was talking about 388. Well, I don't know how many contracts you have. I don't know how big you are. If you're using the middle, the mini contracts, but say for example you're long 10 natural gas contracts. Okay, it's one of these things. You're coming into the round number of 4. What you're going to start seeing is you're going to see a lot of gyration of puts and calls around $4 here. Okay, like I said before, this is so tempting to take some sort of profit, especially if it pulls back. All right, we already tested the 50 level. I'm going to assume that that's going to hold. Okay, that we would work towards 80 and 90 compared to working down here. But like I showed you before previously here, okay, on this move up, you know, you have a 20-cent pullback, 20-cent pullback from 30 to 90, like 20, 35, 40 cents. And you got up to $3, and then here's a 50-cent pullback, 336 to this, what's that, 70-cent pullback. Now remember, when the contracts roll over, that's why you have this gap here. There's a difference, in the summer months, the fall months when you're not using much gas at all in that. Okay, but we're basically, they've piled into the distant contracts. So it's one of these things that if you want to hold on to a move like this, which is what, March, April, May, June, July, you can see the months you had to endure, okay, some serious to keep going on this here. And if you got spooked out, which where's my weekly, monthly, where's my weekly, monthly again. I'll use that one. Okay, weekly. It's one of these things. If you just draw a trend line, you buy here. Okay, when it comes through, you buy here and you put your stop down here, right? Breaks through again, you buy, you put your stop down here. Here's 52, that's 55. And of course, it's just in contracts if you're rolling from month to month. I'm assuming that this is a wave 3. This is the wave 1. You're 2 on the pullback, and this is on the wave 3. Here you can see how the line's lining up again around 407. They've actually moved into, these are pivots for the whole year. Okay, you can see how it hit the top of the pivot, came down, or R1, and then came back down. Your moving average, but the deal is like I mentioned before on moving averages, is that this would be your buy the dip type deal. It comes down to the moving average, you buy it, and now you're off and running. The thing is like I said, it's one of those where you have to close your eyes and you gotta let this thing run. But like I said before, you're 50-cent pullback, 70-cent pullback, 80 cents, right? 80-cent pullback. So the deal is we got to the upper range. We had to pull back to 50. I'm going to assume that we're not going to see 50 again. But the thing is that all of a sudden you can have a pullback to the 30 area. So like I said, you know, now that's 40 cents. So, but if you just draw a trend line in here, you know, it's still carrying forward. So that's why when they talk about the widowmaker, you know, you're putting in X amount of dollars and you get wiped out, and yet it continues on. So that's why I kind of recommend, or that's not the word to use in my line of work. Using the mini contracts. You know, the problem with UGAZ and DGAZ is that it falls victim to the quote unquote decay, rollover, contango, backwardation is favorable. But you can see here on UGAZ, okay, you had, this is on a daily, so you had, you know, you're at the upper range and came back down and you had the washout. Okay, this is where I did the video and said, hey, you know, I'd be interested in EIA if it gives it to me. You've held on for 3 weeks. You can, on the UGAZ people, it's one of the, like I said, but you know, we played games up in here. You know, I was looking for a 20-cent pullback, got it, got back, you know, and then I come back out Wednesday and talked about screaming about, you know, that's kind of how I look at this, is that once that momentum kicks in, it just, the people don't believe it. You know, there are fewer people in natural gas, you know, UGAZ pushing than at the previous. So it's not frothy, where if you go to, I have the DGAZ on here. Where's my DGAZ? It'll be right here. DGAZ, okay. The bodies went into it. They came out of it. We're getting, they bought the obvious dip. They got spanked. Then they finally came out of it. Okay, so it doesn't mean that it can't be persistent like this here, right? But you're getting a lot of volume. Okay, I'm not saying that you should go run into buy DGAZ, but the thing is that they're not willing to be short. Okay, yeah, they're not willing to be short, but they're not also willing to be long. And we also saw that in the commitment to trader. So that tells me that there's still more. What I'm waiting for, and that's why I want to avoid, you know, to start bloating out numbers. Like if I say 420, you know, I want the rest of the herd out there to start pulling numbers out of their keister, you know, and see if they start talking about 750, things of that nature. So the deal is that, you know, I don't think we'll see 330. We have some pretty good weather this week. There's still some more room to run on the UGAZ, but it's one of these where, you know, it's a toughie. You know, you have to kind of hang on here. You know, it's one of those, if you get a dip, I'd be interested in it. You know, that's where, you know, the products run into some problems here. But, you know, at best for right now, we looked at it on a longer basis. It's, you know, a lot of sideways, you know, but it's got some marching going on here, you know. So, you know, it's one of those where, you know, we might have one here, you know, and I don't like it when it takes off like that. I prefer the stair step, because it kind of, you know, up and down, up and down, up and down, up. And, you know, this is a little bit deeper, but this is your buyback here. Then it's, when it's like this, you know, percentage wise, the pullback it gets to be a little bit greater. So the risk here is, you know, your moving averages, where are my little dots? Parabolic SAR. That helps for your trailing stops, 350 area. Okay, 390. You know, this is what you're running into now. But when you get a move like this, it's a good momentum on here. We saw the bully, how they, you know, I talked about how in November that they can come in bully markets, and we saw with what happened with copper with a larger sideways pattern. You know, natural gas has been going sideways since 2009. So even though, you know, like I said, if something should happen and, you know, all of a sudden you get to whatever, we decide that this is the end of the run for now, don't avoid this thing. You know, if they get the hard sell-off or whatever, look to buy, you know, October contracts for next year or the following months, or you know, your winter months again. Because to me, basically last week we only had two moves. We had the up move to make a new high. We had basically a retest of the 50 area, and so, you know, for right now, we're going to say that, you know, it has to hold the 60 area again, maybe down to 57. But they're going to be looking forward to basically weather related type deal. So it's one of those, you know, we haven't even hit January yet, February. So it's one of those things that, unfortunately, you know, if you're not properly leveraged, you know, like I said, you know, if you put in 100% of the margin, you know, down here at 270, you put in 27 grand, and now you're at 37 grand. That's still, you know, it's not as much as putting in, you know, minimum margin and getting this and going, wow, I made, you know, hundreds of % return. Well, you know, all of a sudden you can pull back a little bit and lose half, you know, but if you have the full amount in or more, you still have some more swing. You know, because what I think is going to happen is we're going to try and shoot up here towards that 88 level, and then maybe pull back and then swing through the fours. But that's, you know, we have to get through Sunday, Monday first, right? So we'll see going into it. Like I said, I'm going to be kind of quiet about this because I want to see if the herd decides to jump into UGAZ, because you saw that they're not up to the frothy level yet where the DGAZ people are. And here's the caveat on that one. For us to go higher, you need to get some shorts in here. This was a good reversal bar here, right? Okay, then that's when I said, you know, hold at the 350 level, and it got to 353. All right, and then we swung up. All right. What we need to do, the pros need to come in here and bid this thing something fierce. They need to get away from this level. They're slanted long. They need to, you know, get with the program and move this thing out of here. They have weather related. All they have to, it's when they, in commodities, when they talk about, you know, the train thing, you know, you just close your eyes and get on board, you know, and that kind of thing. Unfortunately, you know, for my risk, this is where, you know, the turn was for me, and now we're up to here. So it's like, well, if it falls down to here, you know, to me, I'm still good. You know, I'd be willing to buy into here for another swing higher. There are other ones too. UNL was one, and I talked about Boyle. Oh, not unless one of these days. Dear Apple. UNL, this is a 12-month natural gas. I haven't read the prospectus, but if this is what I think it is here, it's like the Bloomberg sub-index. So this one here looks like a good that it's going to hit the run to the 82,000 in volume. I prefer the Boyle. You know, if you want to have a resting order, no, this does look like it's just going to swing higher, doesn't it? Yeah, has some serious momentum. I was looking for a pullback to the 15 level, which is, here's 16, which is pivot. These will adjust as it goes higher or lower. Like I said, there is a December seasonal in natural gas seasonal. I'll use any of these here. Okay, here was the October high. Natural gas came down. Here is end of December. So it's like, you know, it's like, you know, and then January and February, and that's when it's normal, right? I mean, every X amount of years, well, we've gone 9 years. This one hasn't been updated for a while, though. One of these is, I think, 7. what do we have here? 17 years, 2007. Okay, so this doesn't include all the years of sideways action in natural gas. But here, January, February, February, March, this is, so it's one of these things that if there is a pullback, you want to look into those other months. Okay, the October high, December is, we're higher than we were in October. So it's, whoops, come here you. Where am I at? October. We're higher than October, which is typically as a weaker high. So there is a little bit of momentum that way. Okay. These guys are going to have to support this. We're still dealing with, where am I at here? Where are you down there? There. What is this? 50, we already hit it. 320. Where are you at? You bonkers. We can say 355. 336. 1, 2, 3, 4, 5. ABC. We need to get a few more going on here. So we need to, like I said, the pro guys here, they have to hurry up and get this thing out of here. Let me switch over to this real quick. Let me show you something here. Come on, you. All right. Is that recording? It is. What do you know? All right. Get out of there, you. All right. Come on there. Okay. So, all right. We have natty gas. Oh, no. Kevin. How about you just go back and go straight to it there, buddy? Natty gas. All right. 2 years. Okay. So pivot's 45. All right. This is your next level up in here, okay? And that's, like I said, the 88 area. So we're, I'm treating this as a wave 3, which is supposed to be the longest. Okay, so it's one of, like I said, I'm hoping that we get to like 407 and then pull back and test this level. You can see that there. I mean, this is the bottom in March. Where are we at here? I mean, we're at a long sideways pattern, trading. So it's like I'm trying to get it, it's one of those you have to hold on. Now we're at 65. We'll see if the guys come in and support this thing. Like I said, we need to find some shorts to move this thing higher. The UGAZ people, this is probably going to typically what happens on Sunday does reverse on Monday, but we'll see here how this pans out. Like I said before, when we looked at where are we at? Commitment of traders, they're long 500,000 and they're short 45. Managed money is long 500,000 and short 20. So the guys have to come in, guys and gals, they have to come in and support, say, a weaker opening here. And hopefully it's a slingshot. But like I said, I'm it's one of those where you have to endure sometimes some pain to hold on to this thing, and to each their own. It's if you get out, that's fine. You can always get back in. It's a toughie, but like I showed you before, on the charts, you know, it can be, you know, some deep pullbacks. Now remember, like I said before too, is that, you know, we're coming off of this is a 17-year low. I mean, we're only, you know, a couple of pennies off of there, you know, so we're 65. 65 is R1 on here. I'll take it. You guys have held through the 50. We shall see. I'm going to upload this and then send this out to you, because you guys will have wheat and Japanese yen and natty gas. And then I'll do oil equities and take a look at my list here. But like I said, you know, even if you get spooked out of this thing or whatever, the deal is this is a longer sideways pattern, just like here, a little bit wider, you know, a little bit wider than back here, but all of a sudden it just took off running, you know, and that's the thing. You got a large sideways pattern, a 17-year low, you know, that's the whole, you know, it can only go to zero. So here was, you know, if you put in 100% of margin, you can handle it. You know, on the it's a toughie. I mean, you look at it's different, right? There's a big difference between being, you know, looking at the chart like this and go, oh, this is a slice of pie. I just have to buy the July contract and hold on, you know. So yeah. All right, we'll see. Maybe we'll see about this one here. 65. See, you know, what I believe is we retested this here, the pullback, high low. It is on there. Okay, so on a weekly basis, you know, we went up, pulled back, retested this downtrend line, and we should be good to go here. We'll see if these guys can run this thing here. Opening at 65. Come on, boys and gals. All right, there you have it.